Okay, so today was one of those days in the market that just makes you scratch your head. We woke up to some fantastic news on inflation, the kind of stuff that should have sent stocks flying. But by the end of the day, it was a total sea of red. So let's dig into what on earth happened and why good news just wasn't good enough this time.
Right. This is the million-dollar question we're tackling today. The CPI report, the big inflation number, actually came in better than anyone expected. That should be pure rocket fuel for the market, right? But it wasn't. Something else was lurking in the shadows. So what went so wrong?
And here are the numbers to prove it. You can see the Dow, S&P, and NASDAQ all ended the day down. But look at that last line, the VIX. That's the market's fear index, and it jumped over 5%. That tells you that even with the good inflation data, anxiety was seriously building up all day, and it just washed away all that morning optimism.
So what it really boils down to is that there were these two huge waves of fear that were just way stronger than the positive economic news. We're going to unpack exactly what had investors so spooked. The first jolt of fear came right from the big banks. It was the start of earnings season, and JP Chase was up first. As you know, their results can really set the tone for, well, pretty much everyone.
Now, at first glance, the report looked pretty good. They beat on revenue and earnings. But smart money looks deeper, right? And what they saw was some real weakness in investment banking and a massive $2.2 billion set aside for potential credit losses. That wasn't a sign of confidence. That was a major red flag.
Okay, so if the JP report was a warning shot, what came next was a direct hit. This time, the fear was coming from Washington, and it sent a shockwave across the entire financial industry.
So here's the proposal that caused all the chaos. A potential cap on all credit card interest rates at 10%. Think about that. For companies like Visa and MasterCard, whose entire business model relies on those rates, this was a potential bombshell. Their stocks got absolutely hammered on the news.
And you don't have to guess how the industry felt about it. JP Morgan's CEO Jamie Dimon came out swinging with this quote: "We will fight it tooth and nail." That's not just corporate talk. That's a declaration of war. And if there's one thing investors absolutely hate, it's a big, ugly, uncertain political fight.
But, and this is where the story gets really fascinating, it wasn't a day where everyone just sold everything. While all that fear was grabbing the headlines, a ton of money was actually moving around, flowing into some very specific, very strong areas of the market. It was a completely different story if you knew where to look.
It was truly a tale of two markets. On one side, you had all the pressure on financials and payment companies. Total mess. But on the other side, money was just pouring into semiconductors, energy, and defense stocks. So this wasn't really a panic sell day, it was a huge rotation day.
And the undisputed champions of the day were the semiconductor stocks. I mean, just look at these numbers. While the rest of the market was bleeding, AMD and Intel shot up over 6% each. This wasn't just a small move. This was an absolute explosion. So what was going on here?
It all came down to a huge analyst upgrade from KeyBank. They boosted their rating on both AMD and Intel, and they pointed to one of the biggest stories in the market right now, the unstoppable demand for AI technology. So while one part of the market was freaking out about regulation, another part was betting big on innovation. And beyond that incredible tech rally, investors were also running for cover. We saw all the classic safe haven moves. Gold and silver popped to new highs. Energy stocks did great as crude oil jumped almost 3%. And, no surprise, defense stocks climbed as a hedge against all this uncertainty in the world. People were protecting their money. Okay, so we've broken down the fears, and we found where the money was flowing. So the big question now is, how do we take all this information and turn it into a smart, actionable plan for you? Let's lay out a playbook based on how much risk you're comfortable with. If you're more conservative, you might just wait and see what the other big banks report. For a more neutral stance, maybe you look to buy semiconductor stocks if they dip a little, because that strength is undeniable. And if you're more aggressive, you could be asking if that sell-off in Visa and MasterCard was an overreaction and a buying opportunity, while also riding that hot hand in the semi-space.
So looking ahead to tomorrow, here's what's on my radar. First, we get more big bank earnings. Bank of America, Wells Fargo, and Citi. That's huge. We also get another inflation number, the PPI. But honestly, the main thing I'm watching is to see if this powerful rally in semiconductors has legs. Is the money going to keep flowing there? So when you boil it all down, today was really a battle between two giant forces. The fear of government policy crashing down on one side and the incredible hope and hype for AI-driven profits on the other. It's a perfect snapshot of the market's mood right now. So the big question for you to think about is, in this massive tug of war, which side are you betting on to win?